Good morning, Fivers. Today is November 19th, and we'll do some intra-day levels for the major Forex currencies. Like I said, if you do have any requests, any specific questions, um, or any topics you would like me to discuss, write it in the Q&A. So I can uh, give you my best attention. But let's do a quick review. Yesterday, I was more of showcasing to you the way that I analyze um, order flow, supply and demand, um, um, and we did it on a high time frame, so we can extract um, the the bigger levels, and we can see what is the main incentive of each currency. Um, I was dragged to do some educational about the terms that I use. So it took a little bit longer, and we didn't achieve much coverage for the whole market. I think it will be more valuable to go and do intraday levels, and I find some interesting things for the Kiwi, the New Zealand dollar versus the US dollar. So let's review it, and then we can do a few more intradays for other levels. So first, we always do drill down from high time frame to low time frame. We can see that in the daily for the NZD, for the QE, we are at consolidation area for a very long time, starting August 15, maybe June 2015. And since then, we are somewhat in a ranging. And in the past months, since this August, we are consolidating around the very lows that were established on the 2015. And we even hit lower than the 2015 and got it retested once more. This tells us that price may go lower, and it's only obvious and natural behavior for price action to have a rejection on a daily level around this level of let's call it by name, which is around the 0.623s. That's the area that we are aiming, and we believe that price should go lower than that. How low? We can look for lower levels on the weekly. So price can go much lower. We can also see that within this consolidation, the hires were not actually breaking any major supply, which is this last flag. Let's mark it. The whole flag here was not, it was penetrated, but it wasn't broken. So as long as this level is not broken, price still on the selling bias, and this is what we're expecting. And since we have more clues that price is pushing downwards, meaning that it was breaking the 2015 lowest level, we expect for lower lows. So in the long terms, we are looking for down drilling lower to the lower time frame to H1, which is the mids. I love this time frame because it's give us also the long time frame perspective, but also some window into the intraday. We can see that price is ranging and being pushed every time it's being trying to achieve something. It's being pushed down. Although we had these very strong spikes going up these poles, we still price is still chasing and crawling back to make lower lows. So we have a very strong push up, wasn't achieving much. It wasn't breaking the highs, any significant high. It was breaking some highs, but not significant one highs. This is a very typical false breakout scenario where people are looking for the very nearby levels to break, and they think something is going to a certain direction, but actually price is being blocked by something which is far furthermore in history. So it's a typical fake out scenario that you should be aware of, not fall to that. Anyway, it's still H1, and there were many pips to take on this false breakout if you were buying, um, but the scope for this trade was not that high because the bias still wasn't changing, although this false breakout. Anyway, price made an effort to go higher, but it couldn't break to higher highs. Although we had seen strong pushes upwards, and the effort wasn't really making any significance, it tells us that these poles are in some way liquidity gaps or manipulations to trick people to buy. It can be it buying orders can be made with two different activities in the market. One is that somebody is actually being loading buying positions to his portfolio. The other way is somebody is getting rid of his short positions. So these two scenarios are creating buy action or injecting demand orders into the market. And so maybe these spikes are somebody's selling very hard, very aggressively to cash in some intraday or lower time frame trades positions. So we see these spikes, but we still don't see any significance. So don't fall for that this may represent power for the buyers. It can be just something to trick you out. And we're looking for price achievement. If price is not breaking significant level, we don't care what is the energy that pushed price over there. We only care to see if price was able to push significant levels, and it wasn't. So in my idea, Kiwi is still on the short bias. So let's move on to M15 and see some opportunities to try and sell. We can see that after this very hard push up, which also on itself on this very same time frame wasn't really breaking any significance of its own. and also a price was not uh, being able um, to actually go. It was rejected by the highest of this um, impulsive pull. We can assume that price is having a strong resistance by the sellers, and so we can sell with them. We can see on M5 these levels that I marked. These are the very low risk prices that we can try and buy. Actually, this one, the 6411, is something that is already being wasted. I've marked it because in very low time frame we can see here a flag, and price was actually breaking it, and then it reacted um, lower low. This is just showing us the reason why price was rejected here. And once it was rejecting here, it was pushed much stronger than and pushed the lowers of this flag, and therefore we can see that the sellers are accumulating power, and we want to be with the sellers on the lower time frame. So everything is starting to be aligned for the Kiwi, and so we can sell even at the low frame. Yesterday, I got a question: how can we time in our entries based on supply and demand that I've marked um, on the daily and weekly charts? So this is how we do it. We drill down to lower time frame, M15, M5, sometimes M1, and once we see that everything is aligned with our main bias, we can time in more precise way our entry. So we can see the effort is being paid off with the sellers, breaking lower lows and then trying to accomplish and break another high and not making it, and being pushed even harder, and now its price getting lower. Now what we're going to look for is opportunities to sell, and in between these are the levels that I've marked that are going to hold on our trades and give and will just give us some reaction. But if for some reason after price was is hitting these levels, it's going to react in a more aggressive way, and it will start breaking significant lower time frame highs. Then if price was triggered by these specific levels, then we can call off our short position for the lower time frame and just cash in whatever we already have. So what I'm saying that is, if price was touching this and loaded with these demands and making significance, then we should cash out our low time frame uh, positions. We can still hold on for the short if we're looking for the long term, but we can expect these levels to consume some of our profits while we are holding our trades. So this is going to be a natural thing to expect. So where to look for these sales? So it's not the 6411. I've just marked it to justify this event that gives us significant lows. So we know that we're accumulating sellers into the position. And now we actually nearby a compression level. You remember I've mentioned this before. Compression is an area where all the supply or demand, in this case it's supply, is being consumed while going into a certain direction. Every time price is making lower low, it's also coming back, taking all the remaining orders, and we assume that in this area there is no supply at this moment. So usually the border of this, the two borders of the compression area, the lower and the higher, are where we're going to look for lower probability trades. We would not want to sell around this area. If we are in a scalping trading mood, we can, if price penetrates in here, we can wait for a retest back to this level. Let me mark it for you. We can wait for price to retest this level, buy here, and sell the edge of the compression, maybe a little bit before. So this could be a very low time frame tactical reason to buy this area, because all this area is consumed and there are no sellers here. So if price penetrates here, it should be easy way up all the way here and maybe here as well. But what we can do is also we can look up for selling the green lines. We can wait for price to go either here and sell it, expecting for much lower, or we can try to sell here at this level. We can also wait for price. If price goes higher, we can also sell here, and this would be the highest probability. The highest probability entry to sell this consolidation area for the kiwi. It's not necessarily that price will get there, but if we are patient enough and we want to take only the very high accurate trades, 64.16 would be that level. Price may not reach there, so we can miss the whole move. But if in our profile we're looking for high accuracy, we should wait for this. If we want to take more risk, we can try to take these levels below and start riding for lower lows. So this is what happened for the kiwi. Any questions about this? Good. Okay. Yesterday we've created on the cable, we are marking this demand. Let me show it on. We were marking this demand, this supply, I'm sorry. And during the day yesterday, I was going over charts and seeing this spike reacting to this supply in a very accurate way, giving out 43 pips reaction. It doesn't mean that we could have taken that trade. It doesn't mean that we would want to take this trade because it was already being consumed before. So we wouldn't want to take it. But just to show you that supply demand, if we mark it right, they are giving a very accurate, sometimes on the pip um, reaction. So we can always scalp these. And if we have like 40 pips reaction, we could at least take 20 of it after price is showing pushed from being pushed by the buyers. So we had like 43 pips almost reaction from our entry, and then we had a very strong pushed up for another 28. So if we would going out after breaking this high, we would taking about 16, 17 pips very easily, just playing these major key levels. So daily supply and demand levels are actually working, and they can give us opportunities. If we hit any high level key levels, um, we can always scalp them for 20 to 40 pips. That would give us a very nice bread and butter trades. So let's review another asset. The Japanese yen. Let's see what's going on with it. The Japanese yen is actually um, in the last weeks is being pushed higher, and I believe that the trend is changing. Let's see. We don't have lower history to see what is this area. Oops. What is this area is pushed off, but we see that price is pushing up, continuously breaking levels and making higher highs all of the time. And then even though it was pushing lower than this base action, it was stopped by this demand, and it was loaded with a lot of sellers on the up, and it reacted very, very strong to the very next target, which is this supply. Yet this achievement was breaking drop base drop, um, but it wasn't actually breaking higher highs, and it also not reaching the highest target of this, which means that if price would go any higher, or if price would want to go any lower, the best place to get it is around these areas. So if we believe that there are smart traders with abilities to manipulate or push the markets in any certain direction, and we believe that they are smart, and they have the tools to drive the market to certain levels, um, then their main interest will be to sell from these highs, because these guys wanted to get the best price for it, right? So whatever should happen, whether we're pushing for higher because this is the main bias for the Japanese yen in the weekly, or if price should go lower to these origin of the main move, price should first visit here. That's the most logic thing that institutionals and the big money traders would want to do. So this give us the main bias on the long term for the Japanese yen to actually um, buy the US dollars with the Japanese yen and look up for higher highs. So drilling down to lower time frame, we are looking for good opportunities to buy. We see that price is being um, pushing higher, breaking higher highs, making an effort, and it pays. It breaking significance. So we can see also when price is being pushed down, it being blocked by significant demand, like in here. Okay, so price is being blocked by demand, being breaking supplies, right? So the bias also on H1 is to buy, yet we are in mid-range at the moment, and what we can spot here is opportunity on the lower time frame to buy somewhere around this area. This whole demand here that we might want to buy from is pretty much consumed by this activity. We see that price is made high and then it penetrates very, very low. This area is pretty much consumed. Let me mark this for you. Um, all right. Okay. So this area is pretty much consumed. Everything here is compressed, was tested before. So we don't want to buy it. The next place where we can look up for real demand is around here. But we see also price was checking this place and bounced off this. So that will also cancel out this one as a demand. So the next demand that we are looking for can be either this, but it was tested. So our next level will be this flag to try out. Price was almost reaching here, but not. So we can expect price to go lower, breaking this uh, this spike. Right. Oh, I can't do this. Okay, breaking this spike somewhere around this zone. Somewhere around this zone, we can expect to buy. Because everything here is very choppy and was tested before, I advise not to enter with a non-brainer buy, but only to use a very low time frame confirmation. We can discuss what is a confirmation, and then once we have it, we can shoot for a swing for buys and try to make uh, try to take a very long-term trade with um, a lot of potential here. Maybe to that target, we have like 170 pips um, to bank around here. It will take time. The Japanese yen like to chop and retest. So if you have the patience and you have the guts to hold on for such activity, it can be worthwhile. So buy the US dollar, sell the Japanese yen all the way around to 100, 110, 80s, 18s, and that would give us a very cool um, trade to buy. So these are the levels that we expect for the Japanese yen. Um, some barriers to mind while we're uh, going upwards is this flag, which is drop base drop, was already being penetrated, so we expect price to go upward. One scenario that can go here is that it would be pushed on the higher here and bounce on the key level and then go for another retest the top and again then go up, test the higher, retest whatever achieved after retesting the top, and then breaking in and going to our TP, to our take profit target. So that's a possible scenario I would like to see. Of course, price action can surprise us, and we can expect much lower retracements, deeper retracements in between, but we will see as price advances, and we'll be very mindful to everything. So these are the um, intraday levels for the Japanese yen to buy and to take this whole range. Another low time frame, um, another low time frame target can be here to take the region of this massive drop at 1899. Suppose it's 18, it's 19. I believe. Okay, so it's one it's one 109. It's a whole number, so probably will have some more rejection by the people that like whole numbers. Um, it works because it's a psychological level, and a lot of people are using psychological level. But do mind that everything that is common knowledge can be also a trap. So don't sell or buy whole numbers because you can be tricked over this if somebody has um, bigger money to manipulate you in there. So do mind this. Anyway, if you see it working and if you have low time frame confirmation around these numbers, you can scalp your way into the market. So this will be for today. Our 30 minutes had passed. So these are some intradays um, um, levels and the main bias for the US dollar and for the Japanese yen. Sorry, for the Kiwi and for the Japanese. Um, So if you got any questions, you can leave it here. If you have any further questions, you can send us email, um, and we will answer this. Um, Mark is asking, what do we use for confirmation? So, in terms of order flow theory, every time we see um, price rejected by a key level, let me draw this for you. Okay. If we have a key level and price is being bounced off a key level, not before, not after. If the price level is reacting and pushing price, rejecting price, what we want to see is first the rejection, and we want to see that after the rejection, we want to see some retracement back to some level, maybe to the demand that was created after the bounce here. And then we want to see price is starting to break um, the very the peaks that was created. We can discuss more about why it is happening, but every time there is a change in price, it first has some negotiation, that's the base, and then it's going down, having a negotiation and changes. This negotiation creates our supply and demand areas. Okay, so if we see price breaking this negotiation area and going down, we would have our confirmation. This will be our confirmation. This will be our confirmation. It doesn't mean that we jump right away here. We will wait for price to go down because we want to enter the very low risk, the trade that will give us the least drawdown possible. So we would wait for price to go down after this. This is a false breakout. This is a false breakout. People will be tricked to buy from here, and they will suffer a lot of drawdown around here, and they might be panic and take off their trades, and then trade would and then price would go to the region um, um, of this significant achievement and will kick off from here. So people will be panic around this range, take off their trade, and price will be kicked off from the region of the pole that made some significance. And from now, this confirmation that was made here will be triggered right here on the demand that was created, the effort to break significance. So this is a confirmation on a low time frame. So if we were marking this on M15, you can go all the way to M5 or M1 to do this. And so you will have the very best entry, very accurate, very low drawdown to suffer. Yet you have to remember that not always price going that low. But if you're patient enough to take this, and if you're willing to sacrifice yourself, not taking and see price going without you at times, you would be assured that the ones that you are taking are having a very low drawdown, and it's very, very rewarding. Your reward ratio here is enormous, and it's really worth missing out some action in the market because of that. So do mind that and don't chase things that you cannot take. Sometimes price would be blocked before we have our trade in, and this is okay. We cannot take everything, but think of the other side of it. If you would be chasing everything, although you had confirmation, sometimes you would suffer deep drawdown that you cannot handle. Sometimes it will be something to trick you. Um, your risk reward ratio will be much lower, and you will be having much more trades with lower risk reward ratio, and that will be less efficient, and sometimes will be what determine if your whole portfolio is profitable or not. So um, wait for the very best risk reward ratio trades, and you'll be fine. So this is confirmation. We can, if you want to learn more about this, do remind me this to mention on the next sessions, and we can see more scenarios of how it's being actually happen in the market, and not just theoretically by rough drawing. So excuse my handwriting and my jerky lines, so we'll see you hopefully tomorrow. Please excuse us for doing some mistakes setting this webinar hour, but we'll do better and better. It's just the first week we do it, so expect some issues. Anyway, thank you for joining in today. We'll see you hopefully tomorrow. Good day.